Hello students, I am Dr. Panduranga Nayak, Principal SVS College Bantwal. Today I am going to make a presentation on the topic Income from Salary, video number 4. See, already you have learnt as to how to compute gross total income. See, how to compute the taxable income under 5 heads: income from salary, income from house property, business income or professional income, capital gains, and ultimately income from other sources. So there are 5 heads of income. So you have to compute the income under each of the heads. Then you have to total them up. And then what you get is gross total income. From the gross total income, you are entitled to have certain deductions. That is in respect of certain payments made and incomes received. So you are entitled to certain deductions. So we call that general deductions under section 80. The aggregate amount of deduction under section 80 C to 80U, there are so many deductions, and as I have told you earlier, all the deductions are not equally applicable to all type of assessees. The deductions which are applicable to an individual need not be applicable to HUF or company or a firm. Therefore, it varies. Anyway, the aggregate amount of deduction under 80C to 80U cannot exceed the gross total income. Supposing the gross total income is, say, 2 lakh. Say, 1,25,000. And the deductions are, say, 1,50,000. But the deductions, total deductions cannot exceed the gross total income. So though you are eligible for 1,50,000 deductions, the gross total income is 1,25,000. Therefore, it is restricted to 1,25,000 only. So these are important point. Aggregate amount of deductions under section 80C to 80U cannot exceed the gross total income. We are not going to study all the deductions, that is from 80C to 80U, in this semester. Only certain deductions are to be studied by you as per the syllabus. Now we'll study the deductions one by one which are prescribed in the syllabus. So first, deduction under 80C. These are the deductions which are related to salary income. Therefore, you are studying only those deductions which are relevant to salary income. Okay, first we are going to study section 80C. So under section 80C, the maximum deduction is 1,50,000. But then supposing the qualified amount is less than 1,50,000, supposing it is say 1,10,000, then the rule is qualifying amount 1,10,000 or rupees 1,50,000, whichever is less. On the other hand, the qualified amount is 1,70,000 and the maximum deduction is 1,50,000. After this, whichever is less, so 1,50,000, the maximum deduction that is applicable. Okay, so maximum deduction is 1,50,000 and deduction is allowed only in the case of individuals as well as HUF, Hindu undivided family. The following deductions are available whether the payments are made out of gross total income or not. Okay, yes. First one is Lyc Premium. Lyc Premium paid cannot exceed 10% of sum assured. Sum assured means policy amount. Yes, 15% if insured is disabled. So a person who takes a policy is called insured and the insurance company is called insurer. And the policy amount is called sum assured. And what you pay for the policy, that's called premium. When policy matures, either on maturity or on death of the insured. Whatever is paid by the insurance company, that is called claims. Anyway, life insurance premium paid not exceeding 10% in respect of policy issued after 1/4/2012. This is very, very important. Before that, it was 20%. So 10% or 20% of what? Of the actual sum assured on the insurance policy taken on the life of himself, his spouse, or his or her child or children. So only three parties. One is the assessee himself or his spouse. Spouse means for husband it is wife, and for wife it is husband. And then his or her child or children. Okay, remember here 10% after 1/4/2012. If it is before that, it is restricted to 20%. And in the case of disabled persons, it is 15%. After 1/4/2012. Before that, it is flat rate of 20%, whether the assessee is disabled or not. Okay, now child means what? The term child includes natural child or adopted child or stepchild or surrogate child, minor or major, employed or unemployed, married or unmarried. These terminologies are very important while solving the problems. You will come across these terminologies. For example, premium paid on the policy taken on employed son. So that way, or married daughter. So that way you may get a transaction in the problem or an item in the problem. In the case of HUF, the premium paid should have been paid on the insurance policy taken on the life of any member of the family. It could be taken on the life of any member of the family. However, if the assessor discontinues the policy before 2 years premium have been paid, no deduction will be allowed in respect of year in which the policy is discontinued. Not only that, the deduction allowed in this regard earlier will be deemed to be the income of the assessee of the year in which the policy is discontinued. So if you have to get the benefit of premium under ATC, you should continue to pay the premium at least for 2 years. If you discontinue the policy before that, you won't get the deduction in the year of discontinuance. Not only that, whatever deduction is allowed in earlier years, that will be taken as income of the year in which you have discontinued the policy. Alright, next one. Contribution by an individual not being repayment of loan to statutory provident fund or superannuation fund or recognized provident fund. These types of funds, provident funds, you already learned in my previous video. So contribution by an individual not being repayment of loan to all these funds. Then contribution not being repayment of loan to 15 years PPF by the individual in his name, in the name of his spouse or minor children, only minor children, not major children. HUF is not allowed to open PPF account. What is PPF account? That also you learned in my previous video. Yes, next. Contribution by an individual or HUF to unit linked insurance plan. Unit linked insurance plan. So this is just like combination of mutual fund as well as insurance. Of what? Of UTI in the name of self, spouse and spouse, self, spouse or any child. Any member in the case of HUF, and such unit linked insurance plan of LIC mutual fund notified under section 23D, and the example for that is Dhanaraksha plan of LIC mutual fund. So any contribution by an individual or HUF to unit linked insurance plan, either of UTI or of LIC of India, That is, example here given is Dhanaraksha plan of LIC mutual fund. Then any sum paid by an individual to effect or to keep in force contract for a deferred annuity. Deferred annuity means regularly you are getting the amount after the expiry of certain period. Defer means postpone. Deferred annuity on the life of the SSC or his or her spouse or any child. Examples are New Jivan Dhara Plan 1, New Jivan Akshay Plan 1, Plan 2, Plan 3 of LIC of India has been notified. So this is also qualified for deduction under 80C. Any sum paid for by an individual for NSC 8th issue or 9th issue and deposit in Sukanya Samriddhi account. The interest accrued thereon is deemed to be reinvested and is eligible for deduction under section 80C. NSC, National Savings Certificate. National Savings Certificate means earlier it was for 6 years, but nowadays either for 5 years or 10 years. So you purchase the NSC in the first year and then you are entitled for deduction under 80C on that. And then, see, every year you are earning the interest. The interest will not be given to you. That will be accumulated in the NSC only. But it is taken as interest received and then reinvested. Therefore, interest is also available for deduction under 80C. But last year's interest, supposing it is 5 years NSC, 5th year interest is not available for deduction under 80C because last year you are going to get the amount on maturity. Therefore, only 4 years interest is taken. 5th year interest is not to be taken. If it is 10 years NSC, okay, then 9 years interest will be taken, but 10th year is not taken because in the 10th year you are not reinvesting. The policy NSC will mature and you are going to get the amount. Then deposit by an individual or HUF in 5 years post office time deposit account. Then deposit by an individual in post office under senior citizen saving scheme. Who is a senior citizen? Senior citizen is one who has completed 60 years of age. So some senior citizens are given certain concessions or they are given some benefit. So even under this scheme, some benefit is given. Post office deposit by an individual who is a senior citizen under the account senior citizen savings bank account. Payment to notified annuity plan of LIC. Annuity means annually paying the amount, or any other insurer approved by IRDA, Insurance Regulatory Development Authority. Insurance Regulatory Development Authority. So that is the regulating authority as far as the insurance business is concerned. Like in the case of stock market is SEBI, Securities and Exchange Board of India. That way insurance business is being regulated by an authority called Insurance Regulatory Development Authority of India. Then investment by an individual or HUF in equity linked savings scheme of mutual fund. I already told you it has got the feature of both equity investment and yes, equity saving scheme of mutual fund. Yes, so it is just like it is mutual fund, but investment is in equity, and therefore mutual fund which is related to equity investment. So if an individual or HUF invests in that mutual fund or issued by the UTI, then he is entitled for deduction under 80C. So investments by an individual or HUF in equity linked savings scheme of mutual fund or by UTI. Next, contribution by an individual to any notified pension fund set up by mutual fund or by UTI. For example, UTI Retirement Benefit Fund. Then any payment made by an individual or HUF towards the cost of purchase or construction of new residential house property during the previous year. If you purchase a house or if you construct the house and if you have taken a policy, loan, either from a banking institution or housing board or cooperative society, etc., then the principal amount is deductible under 80C. But it is only for two purposes. One is for purchase of house and the other one is construction of the house. The benefit is not available or deduction is not available if the payment is made towards the cost of the land, or in addition, renovation or repair of the repairs carried out after its completion are not qualified for deduction. So only for purchase of the house and for construction of the house, this deduction is available. That too for principal amount only. If the installment consists of two parts, one is principal amount and the other one is interest on the loan, then only principal amount is available for deduction under 80C. Any payment made by an individual or HUF towards the cost of purchase or construction of a new residential house property during the previous year, the deduction is available in respect of any payment by way of installment or part payment of the amount due to housing board, a cooperative society, etc. Installment here means only the principal amount. Any repayment of loans borrowed by the SSE from the government or bank or LIC of India or any public company formed in India for providing long-term finance for the construction or purchase of residential house in India. See, there is acute problem of accommodation in big cities and suburban, next level of cities. So, to encourage people to construct more and more houses and to solve the problem of scarcity of houses, Income Tax Department has given this concession so that people are motivated to get their houses constructed, so that the problem of housing is going to be solved. So that is why this facility is there. The banks and also government or the LIC, they are advancing the housing loans at a concessional rate of interest. Even stamp duty, registration fee and other expenses incurred for transferring such house to the SSE, that's also available for deduction under 80C. So in total, it is the principal amount only for the construction and purchase of the house. Okay, amount might be borrowed from the housing board or cooperative society, or from government, or from bank or LIC of India, or from public company which is formed in India for providing long-term finance for construction or purchase of residential house in India. And then stamp duty, registration fee, other expenses incurred for transferring such house to the SSE. But remember this point which is highlighted here: payments made towards the cost of land, any addition, renovation or repairs of the repairs carried out after its completion are not qualified for deduction. Now we'll move to the next item. Any amount deposited by an individual or HUF in home loan account scheme. So this was launched by the National Housing Bank through all the branches of scheduled commercial cooperative banks with effect from 1/7/1989. So any deposit by an individual or HUF in home loan account scheme, the accrued interest is also eligible for deduction. The savings made on behalf of minor child by his or her guardian is also qualified for deduction. Next, subscription, it should be BY not BUY, by an individual or HUF to any deposit scheme floated by public sector company which is engaged in providing long-term finance for construction or purchase of a house in India. Next, subscription by an individual or HUF to any deposit scheme floated by any statutory authority. Statutory authority. What is statutory authority or statutory corporation? Which is created by the special act of the Parliament, formed for satisfying the need of housing accommodation in cities, towns and villages in India. Previous one is public sector company. Here it is statutory authority. Okay. Next one, payments by an individual as tuition fees. Remember that exclude development fees or donation to any educational institution situated in India. Why? For the purpose of full-time education in respect of any 2 children of the SSC. So it could be lesser than that, but it cannot be more than on children beyond 2. So if it is for 3 children, deduction is available only for 2 children. That's all. And yes, tuition fee is in respect of full-time education in India, and then it excludes donation or development fees. It does not include fees paid for uniform, books, vehicle charges, food or any other fee of similar nature, but includes library fees, laboratory fees, annual day fees, sports fees, etc. Okay, next one, any amount deposited by an individual or HUF as term deposit for a period of 5 years or more as per the scheme framed by the central government with any scheduled bank. So any deposit for a period of 5 years under salary savings scheme or for a longer period, that is 5 years or more. Okay, so that's also qualified for deduction under 80C, but with any scheduled bank. Subscription by an individual or HUF to notified bonds. So from time to time, the income tax department may notify the bonds in which you can invest and get the deduction under 80C. So this is a big list of avenues in which you can invest and you can get the benefit of 80C. Alright, now let us see one problem. With the help of that you will be able to understand that very easily. Look at the problem here. From the following particulars of Adarsh, find out the deduction available to him under section 80C. See, life insurance premium, own life, but here sum assured is not given, amount of the policy is not given. Therefore, entire 22,000 is available for deduction under 80C. We assume that the policy is taken after 2012, 1/4/2012, and therefore here the entire 22,000 is qualified. Contribution to unrecognized provident fund, this is not qualified for deduction under 80C. Fixed deposit in SBI for 5 years. If the deposit is for 5 years or more, it is available. Then subscription to National Savings Certificate, that is NSC, maybe 8th or 9th issue. Therefore, entire 8,000 is available for deduction, qualified for deduction. Contribution to Public Provident Fund, yes, it's available or it's qualified for deduction. Accrued interest on NSC, that is 8th issue, so available. And then here Public Provident Fund, I told you that is an account opened with the scheduled banks or with the post offices and for a period of 15 years, and that can be continued for a period of 5 years each time. Okay, so Public Provident Fund, and here NSC 8th issue, that's 8,000, and LIC premium on mother's life policy, that's not allowed for deduction. So only premium paid on the life of self, spouse and children, that is allowed for deduction under 80C. Repayment of bank loan borrowed for construction of the house. Here repayment of bank loan means we assume that it is principal amount and it does not matter whether it is from exempted income or taxable income. So agriculture income is actually exempt, but doesn't matter. So as long as you have paid the repayment of, you have gone for repayment of loan. So here 21,000 is repaid. So entire 21,000 is qualified. Tuition fee of one child. So it is allowed for two children. Here it is one child. So it is allowed. Entire 14,000 is qualified. So it is given here in the form of solution. The total amount comes to 1,08,000. Now the rule is that actual qualified amount 1,08,000 or the limit of 1,50,000, whichever is less. Therefore here the entire 1,08,000 is deductible under 80C. So maximum qualifying amount of deduction under 80C is 1,50,000. Therefore the entire amount of 1,08,000 is qualified for deduction. Supposing it is 1,60,000, this amount is 1,60,000, then 1,60,000 or 1,50,000, whichever is less. But here it is 1,88,000, 1,08,000 or 1,50,000, whichever is less. So 1,08,000 is qualified for deduction. And premium on mother's policy and contribution to unrecognized provident fund are not qualified for deduction under 80C. So thank you for giving a patient listening. We'll continue some more problems in the next video.